Good morning, everybody, and welcome to the final week of October. The final week of October, with it being 6:36 p.m. Sunday night over there. I hope you guys aren't too drunk from watching football all day. And I know you got a game coming up later, and I believe the World Series is going on, so let's get all that going with America versus Canada, with the greatest player in baseball not being American. Deport him! Where's ice? So we're heading into the last week, and it's a big week, like I've shared with you in your email, which just went out recently. But most importantly, you have your big gap up on your futures overnight, which we already saw coming off of the comments that were out very early today from your Treasury Secretary Besant, saying that, yeah, China's going to do a deal. They're going to do a deal this weekend. They're going to do a deal this week. And that's the same bullshit that you've been hearing for years and years and years, ever since November of 2016. So, let's get a recap. Last week, yeah, it was what it was supposed to be. A pretty chill week. You know, had that big gap up start out the week, and then everything was supposed to be chilled, let the VIX go relax, and we didn't get it. But because we had gone sideways for those 2, 3, 4 days, it was very easy to get us oversold. Very easy to get oversold as we came down there to that low there Wednesday morning, and to bring us back to the browser, which I have a couple of things I'll go over. Like I shared out there midday on Wednesday, which I never do. I never send out emails in the middle of the week.
Confirmed.
But like I said, 12:33, Trump administration is considering a plan to restrict globally produced exports to China made with or containing U.S. software. The new China export controls under consideration by the U.S. could curb exports on a wide range of goods to China. Oh, I hate to burst your bubble, but China doesn't fucking import anything from you. They don't. They make it themselves. They have the IP for it all. But then what we wound up getting later, after the sanctions on Russia were coming out, was the announcement very quickly from all of the major oil producers over there in China, saying that they're going to stop buying Russian oil because they don't want sanctions put on them. And ba-boop, 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 here we go. And up there on Friday with the gap up off the, obviously, always fake CPI, which I've actually got a very good source on CPI. And they've explained it to me that they do their survey, and then what they take is the best number that they can get. The lowest number that they can get, and that's what they put together to compile the CPI report. I've known that for a long time, but I actually had it come from the horse's mouth, from a source that actually worked for the BLS. So here we were with the big gap up there on CPI, and flat into the end of the day, down to that 67.90. And here we have ourselves another gap, which I didn't have on your chart when I shared it with you as far as your charts going up to the upside. But I did take some time and look over off of that major catastrophic minus 3.3% crash that took place during the summer, down to that 62.1269 on August 1. And the wave that we have, that we are counting here, which again we have continued to stick with the preferred bullish wave for better part of 4, 5, 6 months. 267.59 points to the upside for wave 1, minus 137.48 to the downside for wave 2. Very clean. 420.72, about 1.5 of the amount over there of the wave 1. The bang! I'm gonna kill Russia! Fucking middle of the month, October, China, whatever the fuck it was. Minus 213.8%, a little bit more than 1.5 of wave 2. Again, completely fitting. And here we are at 256.33 as of Friday, where this, call it wave 5, almost matches our wave 1. Almost. Not that it has to, not that it's required, but these are the idiosyncrasies that you see as you tend to trade the market quite often. 67.38.26. Why was this so significant? Well, it's significant because it is your 123.6 extension coming off of your COVID lows into your January 2022 high, down into your October of 2022 lows, whereas back in February, the 5-year anniversary of COVID was where we breached fractionally for a couple of minutes the 100 extension, which would make that a picture perfect minimum for the wave 3 off of the COVID lows, whereas the wave 3 is longer than the wave 1, therefore higher than the 100 extension. Well, that's right there, 618.34, and here is our 67.38.26. Now we're up 40.79% off of the April lows, all right? But what is unhealthy about this? Hallelujah, 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 hallelujah. Then will heaven be in thy mercy. Hallelujah, 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 hallelujah. Is how we have only been able to luster a minus 3.3% decline. There were a couple of other very close to minus 3%, fractionally better than 2% declines on the way up here, but it's almost, I don't have it on the chart anymore, but it's almost exactly as what we had going in there after Joe Biden won. Well, after Joe Biden won, 2021, where we would have an excellent month and then a nice 2.5%, 3% drop. Excellent month into OPEX, 2.5% drop into after OPEX. Excellent month into OPEX, 2.5% drop into OPEX. September 2021, right up there at the highs, 45.45. The nice decline into the beginning of October. Your standard 797-year-old seasonality, and then your move upward into the all-time highs there in January before the new tax year began, and then your decline very quickly accelerated at the very beginning of the year into where Russia invaded Ukraine for your bounce into March before your big 6-7 weeks red in a row down there into June. You're not sitting pretty here. It's not sitting pretty heading into that new year. And when you want to look at this, I've already got it. You've got your 1, you've got your 2, and again, trying to stick with the bullish view. Here's your wave 3, here's your wave 4, almost exactly coming down to that wave 1, almost to the penny, 48.35, 48.18. You did the same thing on the QQQ, and here we are pushing up into what we're considering to continue to call the bullish wave 3 of the bounce off of October, ending the wave 3 for the wave 4 decline before the wave 5 continues to go to the upside, whereas there are a number of people that are already calling right here, this is your wave 3, here is your wave 4, it's all over, and now we are going into the final wave 5, which is due to take the SPX up into the 7200s. Do what you want. Do what you want. I'm just sharing the information as it's been provided from what's in front of us with the chart and how we have our bullish and bearish views, and you always have one which is preferred and one which is an alternative until you start breaking down. And very clearly, it's just clear to the naked eye. The bull's warning is going to be a breakdown below 67.38. Their second warning would be a breakdown below the Epstein files at 66.40. Nothing happening as far as bears taking control unless they can get down below 65.50. And from a standard newbie trader point of view, we're at 6,800, 65.50. Oh my God, that's 250 points away. There's no way that's going to happen. Yeah, well, that's the way things happen, and this is a very big week. So again, sticking on the charts again here with the QQQ, this will be duplicated as we will be having a brand new gap up overnight with this having taken place. And you know what? Actually, that's a little bit of a conspiracy theory to think about. The market's not topped until the QQQ is higher than SPY. Hey, something to think about. It's only, 40 point, 50 point difference now. So, again, over on the QQQ, which I will reflect on to bring you back, you are now, with the gap up, going to be plus 55% from the April lows. You are having breached that major 609.79, major 609.79. We are due to embark on that big 622.12, which wasn't in play. And from a bigger, broader point of view, which I will bring you back again so that there is a little bit of a reflection, is your QQQ is up 53.69% as of now from the April lows. All right. That's greater than your Israel invades Gaza into the AI creation high over there in October 2022 to July of 2023, which was a 49.38% increase. I mean, there's nothing that can compare from a percentage point of view, let alone a points, but from a percentage point of view, there is nothing that can compare to this unless you are familiar with bubbles. And not many people are familiar with bubbles because not a lot of people have traded bubbles because it's been a very long time since there was a bubble. Over on the IWM, not really anything to reflect on other than the fact that we're now going to be going on a fourth week of getting plus or minus 1% every single day. So the volatility is definitely there. What do I have for you? Something else. No, I've shared all of those things in the email. In fact, the email's here that was out. I shared with you the video here so that you can hear it in somebody else's words from a completely different source, what we have been very well aware of for the better part of 2 years, and that is this fraudulent accounting that's been happening in the AI world. You have your earnings this week, which there are a number of major players reporting this week. This week and next week, the biggest 2 weeks of earnings. I caution you about playing something prior to earnings. You're welcome to do whatever it is you like, but I caution you, I've only been doing this, a little bit more than 30 years, that you can simply just wait until after the company has reported, and you can play afterwards, unless you have the vision and the foresight to go 6, 9, 12 months out where you're not really going to be affected by whatever takes place during earnings. So this is your big earnings week, but this is really what your week is. You've got your own pal at 2 o'clock on Wednesday. After the market closes is Meta, Microsoft, and Alphabet. And look, if you want to put a gun to my head and try and tell me, okay, what's going to happen? Okay, so Jerome Powell's going to come out, whatever, blah, 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 blah. Market's going to go up, market's going to go down. And then what happens with Meta, Microsoft, and Alphabet will just be a reversal of whatever took place on the FOMC. And then on Thursday morning, we'll basically be opening semi-flat. Amazon, Apple, obviously Donald Trump over there with the Asian leaders over here, with having met Malaysia, just did a big deal with Thailand. Yeah. Unfortunately, you should go and check the stats on what it is you actually import from Thailand and export to Thailand, which is nothing. but you're going to be getting your China comments coming out this week. So like I said, you got 5 green months in a row. I haven't had the chance to actually put this up for anybody to view, but I will do it in the morning. 6 over on the QQQ, 5 on the IWM. I need a sip of coffee. Hang on a second. It's just coming on 7 a.m. Been up for a few hours, and you can hear the roosters in the background. FOMC days. I would like for someone to take into perspective the dates. That's all I'm saying here. March 19th, 2025. We are in the midst of our decline down into the April lows, having topped 1 month prior on the 5-year anniversary of COVID. And on the FOMC meeting, we closed green, plus 60 points. On May the 7th, we had just embarked off of our bounce from the April bottom, the quick bounce, the quick dip for our wave 1, our wave 2 off of the bottom in April. And here we were starting our recovery back up to SPX 6118. That was on May 7th. Over here on November the 7th, this is the FOMC meeting, which took place the day after Donald Trump won the election. Gapped up 18 points, traded nowhere for the entire day. Nowhere. 36-point range. And then we had a green close. Once again, taking into context where we are, what took place, what was the events happening at that time. And then you obviously have your Jackson Hole, which there's nothing I can do to put you onto Jackson Hole. The pending Fibonacci spiral. Hey, these things, like I've shared many, many times, the one coming off of COVID has been excellent. Other ones have been virtually perfect. This is looking at an October 9th high, 67.64. It's very young. It's very untested. October 17th, I got to put some asterisks there because we got the low, but we got the low overnight. We didn't get it in regular trading. And here, pending a 2-day slippage, the high that we had there on October 22, this is about to be Argentina. Afuera! And go afuera. Gonna go into the shithole. This is a different one, which again, these spirals, I've never considered using it like this. However, this has been used looking at the 57.67 bottom there on May 23, and they're looking at just only lows. Only the lows using the Fibonacci spiral, and look what they get. Low, 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 low. Low's supposed to be here on October 14th. The low came on October the 10th. The next low is not supposed to take place until January, and it does not mean that you are dropping, you are anything. It's simply where you are in the wave and where it comes in to take place. Should have had this color-coded. I know I had it color-coded, but it didn't show up color-coded, so there's your color coding. SPX year-to-date count, you got 118 days that have closed green, 86 days that have closed red. Not fantastic, not supercalifragilistic, whatever. But you have had 29 green weeks and 14 red weeks. And the majority of that all comes within this 5 green months in a row run into where we are heading into, which, again, the hunt for Red October. Here's your SPX plus 15% year to date. Here's your QQQ plus 20% today, year to date. And these are your gaps only going to April. That's the only gaps I'm showing you here are the ones going to April. Nothing below that, nothing whatsoever. But like I shared, October last year, pending a 6th green month in a row, and I was looking like a fucking idiot middle of the month, and I kept on talking about it, kept on talking about it, kept on talking about it. And at the end of the month there, we closed red. We closed red by, what was it, 100 points or something like that for the month. But we closed red, yeah, down minus 0.91% for the month. So, again, going over all of this, and again with the VIX, I had to go and backtrack and look at the VIX last year. Well, this time last year, the VIX was actually higher. The VIX was trading up here in the 1718s as we were going into the last week of October. So anyway, now with your futures that have opened up, you've got your overbought. We don't need to be on this anymore. We've covered all of that. So let's go zoom through these charts real quick. And again, bring you up to date with where you are. Here's your VIX. Here is your VIX hanging down below, having the 10-day, 200-day, 20-day, 400-day, 5-day, 100-day, and 50-day moving averages hugging 1622. Look over on your Dow Jones, and again with your Dow Jones, two gaps that were never filled from last week, and now we are going to be having another gap from over the weekend with this gap up, so we will just go ahead and move that up there. And with your IWM as well, with the gap up that we have had over the week, again with the IWM, looking back over the last 2 weeks from the last visit down there to 240, or 3 weeks from the lows that were placed middle of the month. 240, nearly 240, 240, and here you are again pushing on 252. Tis what it is, what it is. So I will bring you onto the futures, which I had gotten prepared for everybody prior to. And what I have here is the futures, looking at it from a 4-hour chart. And I have on here the 50-day moving average on the ES because we actually broke it. We pierced it. We didn't close below it, but we broke it. And looking at you from here, there you go. You can see how you have gotten extremely overbought as we went into the close there on Friday. And here we are. Again, 4-hour candles are not 1-minute candles, so this candle won't be closing for quite some time, but you are pending a very big overbought. Now, let me just zoom this out for you to give you a bigger, broader, wider view of things. If you can't see that trend line, I can't help you. I just don't know if you can see that trend line. Here's your weekly RSI, which has been negative for the better part of a year and a half. Negative divergence, doesn't matter. Here we are even closer and zoomed in. And you can see here how we've got a weaker RSI. However, we have a higher high. Again, these are things that you normally see on a wave 5. Here is your daily. Having gotten extremely oversold over there on October the 10th, here we are pushing on the daily back towards the upside. There's nothing bearish about the daily. However, you are starting to push up into the 70s, into the 80s, and your 90s are where you kind of start screaming and hollering and going, okay, now we're overbought. Again, here on your NQ, I don't have the 50-day moving average history. I only have it where it currently is, because when we had our lows back here in the middle of October, we did not make contact with that 50-day moving average. However, here we go, looking at the 4-hour, and here we are starting to become aggressively overbought on the NQ. Look at it from a 1-hour point of view, and you can come back and see all of these extreme overboughts when you come on your 1-hour. They don't mean anything until you actually get something going, and when you look over here, you can see already this wants to create a sell divergence. We will see. We will see. We will see. Here is your Dow Jones, looking at it again from a 4-hour point of view. And here you are once again coming into your extreme overbought warning levels. 4 hours is not 2 hours. It's not 30 minutes. So again, use it with a grain of salt because it's a very big week. And again, the only thing that you would be looking for on a come down on the Dow Jones would be a come down and a bullish support at 47,300. You get bullish support at 47,300, you know that you have another wave to the upside still pending. And then here's your Russell 2000, which again, not extremely oversold or overbought, apologize. But you are there, you know, and again, you're talking about the Russell 2000, the weakest link of the weakest links. And here you have your nice big gap up over the weekend and a reflective touch to that blow off all-time high that came over there in the middle of October as well. So 25.1850 is what you should be looking for on the Russell 2000. And if that does support, then you are going to be playing in this distribution zone and not moving yourself back down into that middle upper 2400 low. So what I will leave you with, since you're probably sick and tired of hearing my voice already, is the Netflix and how it has already finished reporting last week. As I've actually been sharing this for months on Netflix retracing back down to 1069, 1069, 1069. That's where I'm looking for Netflix to retrace to. Well, let me show you how funny this video game is, all right? I'm just going to draw this rough, not to the penny. But I have the to the pennies, and let's go ahead and edit this because you are starting there at 1341.15. That's your all-time high. And because I drew these lines already where the prices are, your bottom here is 1144.71, and your ending point there is 1267.10, right there where your candle wick high is. And where does your 100 extension take you to? 1070.66. It's not rocket science. It really is not rocket science. So that would be a picture perfect A, B, C equals A. Picture perfect. Doesn't get better than that. Over here on IBM, what in the fucking fuck? I mean, what the fuck happened there Thursday and Friday?
Crash, great.
They report their earnings, the gap down. Yeah, here we go. That was what I was talking about, 268. And then you get this blow off, plus 50 points, plus 20% fucking move on IBM. Here's your Carvana, who's going to be reporting this week. And just because you have seen all of these, car dealer financiers, finance companies that are starting to report bankruptcy, you better be careful fucking around with Carvana. And here's your Tesla that reported last week. And as I had issued a couple months ago, back in September, Tesla plus 440 warning. Well, as you can see, doesn't like staying up there at plus 440. However, with the gap up that you've got coming back here from the early part of September, you've still not pushed down onto that 2024 close. You're still green for the month or for the year as of now. I think I got it on here. No. Got it on Tesla email. Nope, I got it on default. Yeah, gotta get my stuff right. Yeah, your 410.79 being the 2025 open. It's coming down. It's touching it. It's touching it. It's touching it. It's touching it. But it's not breaking down below it. So 440 above that, that's still where your problem is. Futures, I don't know where they are right now. Let's go back to that. And yeah, we're still here. And all that they have to do, so that you understand, because you are overbought, your upper Keltners have been busted, is all they need to do is go sideways for a few hours, and the upper Keltners will start moving upward. The exponential moving average 21 will continue to move upwards, and your lower Keltners will start moving upwards as well, which will then give you the bullish trend, which will then start pushing everything to the upside, which will then again bring you to, where are we? No, we're not on the VIX, we're over here, and bring you to that 68.7230, which is your perfect, picture perfect, C equals A, coming off the May lows. Doesn't get better than that. 68.72, 67.38, that's your window. Sucks that it's that wide, but that's your window right there. 68.72, 67.38. FOMC on Wednesday will go live, and we will try and make it a little bit more enjoyable than what this has happened this morning. Enjoy your Sunday. See you tomorrow.